Chief Investment Officer at Blue Zone Wealth Advisors. Bryan, thanks for being here. I wonder, after that discussion about how the U.S. is on an unsustainable path, a foreign stock picker like yourself is amped up.
Yeah, to be clear, I didn't pay him to set me up like that, but I couldn't have asked for a better intro.
Nice. All right, so what's kind of the thesis, just starting from the top down, when you guys are looking for international exposure right now?
Sure, yeah, there's no question the U.S. has benefited from a perceived quality advantage over the European stocks, and particularly digging deeper into the U.S., you have this hyper concentration, and we're not necessarily saying that that's going to stop or know when that's going to stop, but we're just starting to rotate some capital over the pond where we feel like there's better risk-reward opportunities that are certainly poised for reacceleration, just given the fact that Europe has gone through, a really slow recovery and somewhat of an industrial recession.
So are the upswing kind of coming here now that they already had a rate cut and are trying to kind of get things on a more stimulative path?
Yeah, we certainly believe so. One of the names that we like over in Switzerland is a company called Lonza Group. It's a contract drug manufacturing organization. The CDMO space in general went through their mini boom-bust cycle following the pandemic as it met the demand of the surge in vaccine demand. However, that seemingly evaporated somewhat overnight. In particular with Lonza, they were over-indexed to Moderna. And so unfortunately for the shares and the previous CEO, they were punished for that. But they have a new management team, CEO, starting this summer. These lines are fungible. You can certainly turn them over into, different drugs. If you look at, there's growing demand within biologics. And if you look at the FDA drug shortage list, over 50% are injectables. And so it's companies like Lonza that are going to meet that demand globally. We're starting to see some consolidation in the space. Actually, another portfolio company that we own, Catalent, that was just bought out by Novo for a 50% premium to help meet the surge in demand for GLP-1 drugs. Lonza actually just purchased a site from Genentech for a little north of $1.2 billion up in the Bay Area. That's going to help them hit their midterm guidance of 12 to 15% growth. Currently, right now, they're just under 30% operating margins, but we feel like they're going to get well above a step function north of 30% and then glide path to the mid 30s. Stock trades for, roughly 15 times forward EBITDA. And we think off of, no growth last year, we see that easily returning to growth and shares getting bid up at least north of 650 Swiss francs.
And where will that sales potential go relative to the GLP-1 impact? Because I would imagine you're in the narrative, you're in the theme, and if they're going to be manufacturing that, it's got to be good for at least, double-digit top-line growth?
Yeah, absolutely. And management has put that out. The nice thing about these businesses is the average contract length is roughly 7 years. So they have great visibility, into their demand. The other thing is they take on partnerships that will benefit from innovation. For example, Lonza has a partnership with Vertex that's focusing on a novel diabetes drug for type 1 diabetes in their small cell space. And that business has been relatively weak, just given the fact that, funding environment has been poor, both from the government and private. But also once they start to see that volume uplift, the margins will really show the operating leverage there.
Okay. All right. Nice shares. Both the stocks that you like here up today. Let's talk DSV as we stay in Europe, but a Danish logistics company. So what's the exposure that you like here? What's moving around there? Is it the e-commerce stuff, or is it more industrial?
DSV we really like it's a diversified Danish logistics company, 3PL player, similar to XPO here in the U.S. pre-spinoffs. Company has a fantastic track record of rolling up the industry, a similarly fragmented industry over there. Return on invested capital north of 20% over their history. Similar ideas that, they've gone through their tough, challenging economic, growth period, and they're starting to benefit from favorable comps. Management recently called out a bottoming in earnings. And actually, a couple weeks ago, FedEx released, and if you looked under the hood there on their international segment, depending on which one, they saw 8 to 13% sequential growth, the largest being international economy at 13% growth. So really nice reacceleration sequentially. Recently the shares have gotten a nice boost as the market anticipates them going through another M&A acquisition over in Germany, which, given their robust history of integrating large M&A transactions and improving their margin outlook, that they're getting the benefit of the doubt there. Lastly, we just see management doing everything in their power, being disciplined on price, improving yields, taking share, and it's poised for growth when we do start to see the economic environment slowly defrost over in Europe.
I love that term. I'm going to borrow that when I start talking about Europe from now on. The great defrosting. However, you got to be careful when talking about Denmark, though. That could be about a Danish, too. All right, we got to go. Thanks, Bryan. Good stuff.